Hey everybody, how's it going? I hope everyone is doing well, having a nice weekend so far. Welcome to this weekend's video of the Strategic Swing Trader. This is Sami Abusaad, Director of Education at T3Live.com. I'd like to start by going over the market. This is the daily chart of the Qs. I'd like to go over the market, give you my take on it. Basically, we had a pretty bearish drop in the Qs, which broke under support, but did not break under major support. Major support is the pivot that makes a new high. So this was the pivot that made a new high. These three pivots here didn't make a new high, so that's not major support. But this was definitely a bearish pullback. It's just that we're not yet in a downtrend. Actually, the more interesting chart to look at would be the weekly time frame. There are only three things that can happen from here. I'm going to take out my annotation tool and show you. The first would be to go back up and negate the sell-off, in which case that will only confirm the bullish bias in the market, the bullishness of this market. Okay, if we negate it, if we take out the highs, obviously all out bullish for the rest of the year. The second thing that can happen is if we were to continue lower. This is unlikely when you have a 45-degree rising 20. It's rare for the market or any stock to just break it and keep going, right? If that happens, we will get a snapback for sure. So let's say next week we break, and that will violate the uptrend, in which case we can look to do the next sell setup short. Okay, so if we continue lower, which is unlikely, we can look to do the next sell setup. The third scenario would be if we were to go sideways here without bouncing back up. And if we do that, then that rising 20 MA will start to flatten out and to curl and lead, which would lead to a breakdown. This is what's known as a transition C, which would be a short setup. So those are the only three things that can happen. Either we go back up, negate the prior highs, or negate this red bar, in which case all out bullish. Second thing would be to continue lower, which is unlikely, but if we do, then we can look for the next sell setup short. And then the third setup would be if we just based, then you could play the transition C breakdown. And based on, and I think the next 2 weeks, 1 or 2 or 3 weeks are going to be very telling. Okay, so keep an eye on the market and just to see how it sets up. As for some swing watches for next week, let's go ahead and take a look. We have AVEO has a daily buy setup. Now, this is not a very good daily buy setup because this is actually a breakout failure, or this is the beginning of a breakout failure. If we were to break under the base here, this would lead to a breakout failure, but I like it higher if we can take out 310 or so right over here. I like it higher because the weekly looks good to me, higher. Moving average just started to curl and point up. Monthly looks good still, but we do need to take out the base. Okay, and if we break under the base, then completely ignore. I wouldn't want to touch it. NAT already broke under above the trend line that it had, and has a 1, 2, 3. Okay, it's interesting. It's not necessarily a top watch. I've already selected my top watches for Monday at least and posted the plays for the strategic swing traders. So if you're in that program, you already know what my plays are gonna be for Monday. This has a nice weekly chart, a double bottom on the monthly. So that's kind of a double bottom setting up. So it's okay, it's not bad. NVAX, I feel bad I'm not in it because I was actually in it that day, but it closed weak and I got out of it. Monthly is just gorgeous. So I like it higher as a long-term trade. Up where it is here is extended, but I'm gonna watch it for some consolidation to get back in it. NVAX. ONCS has a 1, 2, 3 pattern on the daily and has a beautiful monthly chart, similar to the NVAX. Similar to the NVAX. So I like the ONCS higher. Another one that looks good higher, but it's not on my watch list here. I have many backup watches. I only share with you or show you the ones that are more likely to trigger early in the week. But I actually have a bunch of backup ideas. Look at this beautiful BDSI transition A happening on the monthly, but based on the daily, it doesn't look quite ready yet. So that's why it's not even on the list. But the ONCS reminded me of it because it looks very similar to the BDSI on the monthly chart. The PSXP is oil and has also a transition A setup on the monthly. So I do like it higher. Smart, a lot of transition A setups on the monthly chart. What's a transition A? Transition A is when you end the four-stage cycle. This is the four-stage cycle. Okay, and once it ends, one stage, so this is stage one right here, stage two, three, the top, four, the downtrend, and then you get stage one again, two, three, four, and the cycle repeats, right? So if you if you look at some of these other ones, you can see stage one, two, three the top, four the downtrend, stage one, starting stage two, right? Same with the ONCS, stage one, two, three the top, four, and then stage one. PSX, same thing, right? Smart, same thing on the monthly. Smart is not as good because it hasn't yet. Usually you want the moving average to flatten out. Look at the NVAX, based for 2 years. Moving average is flattening out already. ONCS, moving average is flattening out already. If you look at Smart, not quite there. That doesn't mean it can't bounce to $4. It can, but it's probably not going to be sustainable for as a long-term play. It could rally to 4 or so, but it's not going to rally to 8. Okay, most likely it won't. So I like the other ones more long-term, but the daily on the SMRT looks pretty good. TGTX is more of a, what do you call it, an exhaustion gap and then a possible higher low right here and then possible long. If you want a couple more similar to the TGTX, but I'm already in them, Jern, AKRX. I only show you the plays that I'm not in. The ones that I'm in, usually it's too late to share with you. Jern is similar to the TGTX. So if it can break above this hourly base, if you're not in already, I'm already in it, then I will, then you can look to get in it over $1.92. Obviously, I'm not making any recommendations. I'm just showing you some of these ideas for educational purposes only. AKRX, the same thing. Looks higher if it can break above the base. So they're similar to the TGTX. Short, we have AMR. AMR, the truth is I'm already in it, but I did it on the breakdown right here. And now it has another setup, 1, 2, 3. 1, 2, 3. If we can break under Friday's low. So that's why I'm sharing it with you, even though I'm in it. This is similar, I believe, to the I'm in, in the couple of other plays, the NWL, but that's totally late. Similar to the NWL. This is one of my favorite breakdowns of all time, which is when you have a stock that bounces, comes back down to the lows, and bases at the lows. So we have the drop, the bounce, and then it went back down and based at the prior lows. So it's absorbing that little support that it had, and we call that the transfer of demand into supply. So, and we got the breakdown. This was my best trade on Friday. It was an official trade for the strategic swing trader members. So a lot of people are in it. And then the other one is the BSTI. It went back to the lows. See, I do the same thing over and over and over again. So here's the bounce, the retracement back to the lows, and a base at the lows, and then a breakdown. Is that any different than NWL? No, it's not. I've been in this for a few more days than the NWL because it triggered on this green bar. It actually triggered by a few pennies. Didn't go right away, but Friday it broke down nicely. So the NWL and the BSTI, those are a little late. Something similar would be the AMR. Okay, popped here, came back down to the lows, based at the lows, and then a breakdown. I don't really mean to be showing you the same exact setup, but I have specific strategies and I just repeat, repeat, repeat. And that's an edge, right? And look at the AQUA, isn't it similar? So you get the pop off the lows and then the base at the lows. Very similar. It's an advantage, by the way, when you can find the same exact pattern and just repeat, repeat. That's why you hear people sometimes say good trading is boring. It's not boring, but it's they're referring to the repetition, which is true. Now, it's never boring to be making money, but there is quite a bit of repetition in it. CMD gapped under a base, so there's a lot of people that are trapped, and it's breaking down. So I like it lower. CMRE, base breakdown, a little extended, and the breakdown turned into a bottoming tail, so it already broke down. Now we would need to see it break under the bottoming tail in order for it to continue lower. So that's not bad, but it needs to break to negate that bottoming tail. The FSIC gaps a little too gappy for me, and then after the open, it usually doesn't go anywhere. Narrow range bars, but it does have a 1, 2, 3 setup, so it looks lower for sure. It's just not my favorite type of a pattern, or not. I'm sorry, not my favorite type of trading action, right? It doesn't move very much, not a lot of momentum. Glue is a transition C. So if it breaks under the base, that's called a transition C plus a 1, 2, 3 setup, a bearish 1, 2, 3. So this is beautiful actually on the daily chart. Okay, glue is beautiful. Med was my best trade last month. Yeah, September 17th was my entry. And now I'm looking for a replay on it, another entry short under the base. It actually triggered on Friday, but I had like 8 different shorts, so I didn't get this one, but I still like it lower. MED is very, very wild, moves a lot though, right? Moves a lot. SMLP is a daily sell setup, so just a standard daily sell setup. TLRA is a 1, 2, 3 after a professional gap down that gapped under support. See this? When a stock gaps under support, in this case, it gapped well below support. The best gaps are the ones that gap just under support. These are powerful. Why? Because every single person that bought it in the last couple of months, including the smart money, the dumb money, the big money, the small money, the novice, the professional, the Wall Street trader, the total novice trader, every single person is instantly underwater, is instantly in pain. And so they look to exit. Their exiting is the same as they're selling basically. And as they sell, the stock drops. As the stock drops, more and more people start looking to exit as well. And so it starts that snowball effect, right? It starts the snowball effect, and then this is what you get, big red bar. Unfortunately, on Thursday, really liked it, but it was on an uptick and I couldn't get filled on it. Otherwise, this was a really terrific gap. Now I'm gonna look to play it as a swing. I couldn't get filled on it as a day trade. On Monday, it will not be on an uptick. So I'm looking to play it as a 1, 2, 3. WMC is also a 1, 2, 3. It's just that it's down a lot. That's the disadvantage. It gapped down already twice and far away from the 20. But it is a 1, 2, 3. So those are some watches. As I said, I try and share with you the ones that might be triggering early in the week, but I do have backup ideas. So I may end up posting another video during the week. I usually post another video, so be on the lookout for that. And that will do it for tonight. I hope you enjoyed this weekend's video. Enjoy the rest of the weekend, and we shall speak again soon. Happy trading, everybody.